Good morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 15th June 2021. In the international market, FOMC meeting is on Tuesday and Wednesday to discuss the policy. Investors are eyeing on this key event, and the market could trigger a sell-off if taper word is used. As we had mentioned yesterday, the short squeeze of US 10-year is over and the yields are back to 150. US 10-year closed 4 basis points up at 151 and 30-year also closed 4 basis points up at 219 on Monday. Watch out, Mr. Powell will address the FOMC policy on Wednesday, and this will be the most sought after event of June 21 in the crude oil market. Crude is trading at $73.16 per barrel. Short-term range is 70 to 75. The global economic recovery is happening, which increases the demand for crude. As per the Knight research, as you already know, we are bullish on crude at $80 per barrel, and our internal research team is looking for early signs of $100 per barrel in a year. Yes, you heard it right. We are now looking at the early signs of crude at $100 per barrel. In the currency market, currency is trading at dollar index is trading at 90.53. Dollar index today's range is 89.71 to 90.63. As we said yesterday, we do not see a structural strength in dollar to cross 90.90, and there is a resistance at 90.60, 90.70 range. USD CNY or Chinese yuan is at 641. USD INR with a low of 73.10 closed at 73.29. USD INR's range for today seems to be 72.90 to 73.35. Knight Technicals says that 73.30 will act as a support, and yesterday's high and close were at 73.29. How apt. In the domestic market, the euphoria in the 563 2026 and 664 2035 was overdone, and we could see some profit booking yesterday, and that profit booking will continue today as well. 563 2026 closed at 554 versus 551 the previous trading day. 585 2030 closed at 6 versus 6 the previous trading day. Now, Knight's trading strategy, as we had recommended yesterday, our clients have squared off the position before 12:30 p.m. the WPI announcement. Have you seen the WPI and CPI numbers released yesterday? We may see some minor sell-off today, which we will use to buy again where we had an exit just before the WPI numbers. This is the power of research and risk management. Now let's talk about the inflation. Yesterday the CPI and WPI were announced, and the outcome was not good at all for the bond markets. Key data point number 1, WPI inflation, 12.94 in May 21 versus 10.49 in April 21. Knight forecast was at 13% versus actual was at 12.94. Reasons for continuous rise in WPI: number 1, lower base effect. Number 2, higher prices of fuel and manufactured products. As we have reportedly said, increased cost of manufactured good is not completely passed on to the end consumers yet. Till now, it is a cost push inflation where manufacturer is taking a profit margin hit due to weak demand. Once the cost push inflation is passed on to the end consumer, the CPI will also increase further. That is, WPI does impact CPI but with a lag. Key data point number 2, CPI inflation. Headline CPI at 630 in May 21 versus 423 in April 21. Core CPI inflation at 634 in May 21 versus 517 in April 21. The expectation for June 21 CPI is now at 660. Implications of a higher inflation: US CPI at 5%, India CPI at 630, core CPI, which is more sticky in nature as it does not include food and fuel, is at 634. We have been keeping a close eye, updating you in the very same podcast almost every day that this inflation monster is here to stay, and we do not see it as transitory as all the central banks are saying. Today, we will see some minor sell-off in the fixed income space, but eventually it will ease out as there is a G-SEP 1.0 third tranche on June 17. We are not worried much at the current junction. RBI's first mandate is growth for now, keeping inflation aside for some time. We do not expect bond markets to fall much and expects 10-year yields to trade in 6 to 610 range only. We also stick to our original forecast, which we had made for Indian 10-year benchmark to be at 650-670 range by March 22. Trading range for 585-2030 will be 6 to 610 for this week. A word of caution. We have been repeatedly informing you on the HTM AFS shifting, booking profits, measuring and assessing the risk on a daily basis. The markets are artificially low, fully controlled by RBI at current junction. The day RBI lets market to act independently, we may see a steep rise in yields and we need to prepare for the upcoming tsunami. Please act before it is too late. If you want to assess the portfolio risk and guide you to build a more robust inflation-proof portfolio, you can reach out to us on 9930307466 or research at knightfintech.com. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Night Fintech. See you tomorrow with the new episode of Night Snippets.